In this 24th session of market behavior and cost analysis, let us discuss the sources of capital, its meaning and need. In the previous session, we had discussed the meaning of location of firm, primary factors and secondary factors influencing the location of firm. Today, let us proceed to the next concept, that is sources of capital. Finance is the lifeblood of every business. It is required for the proper functioning of business unit. For the establishment of any business, an entrepreneur passes through 4 stages of decision making. The first one being decision as to the assets to be purchased, like plant and machinery, land and building, equipments and so on. The second decision is relating to the determining the total investment required for purchasing the assets. Coming to the third one, decision as to the day-to-day management of the business, that is the amount required to run the daily operations like payment of raw materials, salaries, wages and so on, or in short we can say decision as to the working capital requirement. The last and the important decision is to the sources from where the funds required are to be raised and their proportion. The sources could be ownership capital or borrowed capital. The benefits of the health of every business concern mainly depends upon how well the mentioned decisions are taken and implemented. Every business, whether it is big or small, requires finance to carry on its activities and to achieve its objectives. There are several sources of finance available to a business concern. The selection of sources of finance depends upon factors like cost of financing, tenure, risk, financial condition in the economy, leverage, etc. Capital required for a business can be fixed capital or working capital, that is capital for establishment and capital for its day-to-day operations. Every business has financial requirement which can be classified into short-term requirement, medium-term requirement and long-term requirement. Short-term requirement. Such type of financial need arises to finance current assets. The examples for current assets will be cash, debtors, stock and so on. They arise for a short period of time not exceeding the accounting period, that is 1 year. Medium-term requirement refers to those funds which are required for a period exceeding 1 year but not exceeding 5 years. They are generally availed to meet extensive publicity and advertisement campaign required for a period of between 3 to 5 years. Long-term requirement. Such type of financial need arises to finance fixed assets such as plant, machinery, land and building, etc. They are generally invested for a period of 5 to 10 years. Coming to the meaning of sources of capital. Sources of capital refers to agencies from where the funds are procured. Method of raising finance is linked with period, need and source. Moving forward, let us try to understand why a business or a firm needs finance. As we all know, finance is the lifeblood of every business firm. Every decision which a firm takes is associated or linked to finance either directly or indirectly. Hence, we can say that finance plays a very vital role in the management of the business. If the finance part is well managed, then it is like the firm has achieved its goal. So, it becomes very important to see that the the financial aspects of the business is managed well. Coming to the need for finance, we can say that every business has three phases. The first one is the startup phase. The second is its continuity, that is operation phase. And the third one is the expansion phase. But finance is needed for all these phases. In case of startup, to start up or begin a business, a firm needs funds to purchase essential assets. These assets may be fixed assets or current assets. Usually, current assets are purchased or covered with the help of short-term finance sources, while the fixed assets are financed through long-term requirements. At the time of startup, the business also needs funds to support its research and development. Every business has to carry on the research work so that it can come up with new products and services for the customers. This requires a huge investment of finance. Finance at the time of startup is also required for purchasing production materials. Various materials need to be purchased when the business is commenced. Hence, at the time of startup, finance is a must for any business. Now coming to the second phase, that is operating the business or running the business. For the day-to-day operation of the business or firm, finance is required because salaries, advertising, insurance and other expenses are to be paid so that the business continues to run in a smooth manner. Usually, for the operating of the business or running the business, working capital is considered. Hence, short-term financial needs arises for the operation of the business. Coming to the expansion phase, every business aims at expanding its business, either in present or in future days. Financing is essential for growth and expansion of a firm. Because of competition in the market, capital needs to be invested in developing new product lines and production techniques and also in acquiring assets for future expansion. There are various options or methods for expanding the business. Depending upon the method of expansion, the financial need differs. Hence, in financing business operations and expansion, a business uses both short-term and long-term capital. Expansion can take any of the following forms. Expansion may be in the form of production capacity. The business may think of expanding its business through increasing its production capacity. Or it may also opt for the new products. When the business plans for expansion by introducing new products, then again it has to invest a lot in research and development and assets required for the production of the new product. The business may plan even for expanding through entering into new markets. If the firm decides to capture or acquire the new markets, it has to make itself ready so that it can acquire the new markets. When a business enters a new market, it requires more goods and services. Hence, it has to increase its production. When production has to be increased, financial requirements will also be increased. Expansion may also take in the form of takeover or acquisitions. So one or two companies may merge with themselves and a new company may be formed, or one company or a firm may take over, may purchase another firm. In any ways, it requires again a huge financial support. Business may also think of expansion through new premises, that is, setting up its location in another area. So, when the firm decides to enter new premises, again it requires a lot of financial support. New premises has to be set up, new machines has to be acquired, new building has to be acquired or constructed. So everything has to be set up in the new premises. All of these expansion methods requires a huge financial investment. Hence, finance is required in all the stages of the business. So, startup, running the business, as well as in expanding the business. So, in today's session, we discussed what is the meaning of sources of finance and why do firms require finance. In the next session, we shall take up the sources of capital. For further reference, this material can be studied. Thank you.